folks are asking for some other ones, guys. I think we recently did Scott's Miracle Grow, but someone asked about that. But I'd really like to look at, Paul, is BJ's Wholesale Club. We've never looked at this one.
BJ's.
I don't know who actually just.
I love BJ's.
Now, come on now. Be careful there with where you're headed with that, okay?
I'm. It's like Howard Stern is like, blank a doodle do.
Blank a doodle do. Okay.
Can't get in trouble for that.
Okay. BJ's.
I've never been inside of BJ's Wholesale Club. I only know of one. Do you know? There's one in off Harvard. Is that one you go to? You go to Costco.
It's an American membership-only warehouse club based in Westboro, Massachusetts. They have 219 locations.
Did they just recently go public again?
I see a 5-year. Oh no, you're right. I see my 5-year chart's only pulling up a couple years. So, shall we get after it, Paul?
Okay, guys. $6 billion company, $15 billion in revenue, PE 13.8 check mark, very low profit margin X. And this is another reason why I would get rid of profit margin and PE, but they're going to have a very low profit margin due to the fact that they're a grocery store essentially. Free cash from last year, $650 million bucks. Okay. So right now I'm looking at that, and off the dribble, it seems a little high as a company, but we'll figure it out. We'll go see what it is. The return on invested capital, 4.3%, not very good. That's basically what kind of return can they get on their own invested capital, which is through debt or through equity? Not very high. We want to see a 5-year return of over 12%, but the market's going to do about 10%, so we'll see. Income statement.
So Paul, you weren't sort of thrilled with that $650 million free cash flow to $6 billion market cap? That doesn't tickle you?
What was the market cap?
$6 billion.
I'm sorry. I was looking at revenue. You're right. That's really good. Oh my gosh. Wow. That's pretty good.
Pretty good, right?
Good catch there, Seth.
Okay, one check for PE. Profit margins low, which is expected for this environment. And let's go. Revenue growth is pillar number 3.
12.75, 15.4. Check mark there.
Okay, profit growth.
50 to 421. Check mark there.
Wow, 50 to 421.
That's a big jump.
Okay, how about shares outstanding, which is pillar number 5? I love pillar number 5, Paul.
It's up. 126 to 135.64. The good news is it's down over the last 2 years, but it did jump up in 1 year. Maybe they made an acquisition. I have no idea.
It's an X for shares. Current assets over current liabilities.
1.6 billion versus 2.2. That's an X. Remember I said earlier, food and grocery stores tend to have a negative on the current assets to current liabilities metric.
Why is that?
I think they do a lot on credit.
Okay.
That's another one that I'm thinking about getting rid of. About a third of the companies in the S&P don't have enough current assets to go over current liabilities. It's something to look at, but I don't think we're changing the 8 pillar. That's the good news for the better.
Okay, free cash flow growth. We've already sort of determined this, right? It's right in there. This is the Everything Money software you get as a patron April 15th. If you're asking, you're getting this. And how are things looking for that April 15th? And when you set a date, Paul, you're serious about it. It's happening, right?
I think we could release it today.
Oh, really?
Yeah, but I want to release more things on April 15th. And I want to work through my own bugs a little bit. But I think we can release it today. We'd have a lot of bugs popping up, but we can easily release it today.
Interesting. All right, we were at free cash flow. We did that. So
no, we didn't.
I'm sorry. Go ahead.
Over the last 5 years, 72.6 to 650 over the last 4 years. That's a check mark. Now, guys, last year was a big year for staying home. So I imagine they made a lot of revenue. Look at the big jump in free cash flow over the last year. You got to make sure this is sustainable because this has jumped up over 4 times. You follow what I'm saying?
Yes.
So that's the question I ask here is this sustainable? On the 8 pillars overall, see, it doesn't have, this is one of the bugs. If it doesn't have all 5 years of data, it shows as an X, even though it's only 4 years. So that's one of the bugs I have to work on. Actually, can somebody, can I write that down to myself real quick?
Please do. Trader Mo, what are your thoughts on trading BJ's warehouse stock?
I'm excited. I like this one.
Okay. I see the golf and gaining stick already. Go ahead.
Yeah, so we're coming up through the sweet spot very nicely.
Candlestick, more like candle.
Okay, Paul. Go ahead.
Our bid and ask difference a little bit high. I don't love it, but today we wouldn't be doing anything today. I think that if we get some green engulfing candlesticks like that, maybe 2 more days, this thing is a buy. I like this a lot. And I think we can probably get a run to about $50 a share. So hopefully I can get in around 45 and grab $5 and go from there. I like this a lot.
Wow, Mo, you don't say that often.
No, I don't. This one, right when I pulled it up, I was like, I'm excited for this one.
So, okay, because this is a little rare, a stupid person like me, one more time, like, why are you in love with this so much?
Okay. So the reason that I like this is because this red line down here is my overall trend. If I'm starting to buy a stock where the trend is up here towards this 80%, we're getting towards that area where it's kind of quote unquote overbought. So maybe the run is a little bit over. I explain it as this area right here between 80% and 32 is like a cookie jar. There's a lot of cookies in here, okay? When you start getting up towards 80%, there are less cookies available, and you just have a bunch of crumbs in there.
Because it's overbought.
Exactly.
Okay.
So you're trying to grab like the few cents at the top, and that's what a lot of people try to find. What I like to do is find a stock that is coming right off this 32% line, because it has so much room to grow. And to me, I can see this thing going up to about $50, $50.50. So if I can just get 2 more engulfing candlesticks, and the engulfing candlesticks are just buy signals for me that the momentum is moving in that direction, then I can go ahead and buy it. This stochastic, instead of being at probably, what is it now? Well, it's probably like 35% now. It might be at 40%. We have 40% basically to run up. Hopefully we can grab $5 a share.
If this interests you, one of our playlists on the YouTube channel is the Trading 101, which again I started, and one of our dear patrons made. Folks are working with you, Mo, to like make some documents on how to get you guys going in the right direction, get your charts going, get all this going. So
the patrons are great. They're so helpful. I basically said, guys, this thing has grown faster than I can imagine. I need help. And just guys just stepped up and just helped out make documents and helped all the new members come in. Like days like today, I can't be there for 4 hours in the Discord. They're in there helping. It's a great community.
Paul, what are you finding over there?
I'm just talking to Bernard asked a very, very good question. He said, hey, there are multiple ways to calculate return on invested capital, and he is right. The one I use is the same one that Sven Carlin uses, and that is I take the profit over the last 5 years, and I divide it by the most recent quarter of non-current, I'll just show you on the balance sheet.
Go ahead.
I always forget the name. Non-current portion of LTD and capital lease obligation, plus long-term liabilities, plus shareholders' equity. So it's net income, net operating income, 5 years, divided by the most recent quarter of these things added together. That's what I use. Because basically, it's like I don't want to give one specific year. I want to look at all, and by the way, I probably should do something like the average of those 3 together of the last 5 years. I probably should do that, but I just do all of it. That's what he uses. And I was just like, yeah, that makes the most sense to me.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.